I'm Gary Korla with Sovereign Wealth Management, and today we'll discuss Bitcoin and what you need to know, the core principles of Bitcoin and how it works in order to get started investing in it. So let's take a look at historic returns. Of course, this is why everybody's interested in Bitcoin, because in and of itself it really has only two reasons for existing: as a store of value and as a way to transfer funds in forms of payment for goods or services. So for the most part, it has really been a source of great returns for those who hold it. Even since 2011, you can see here that the returns have been 636,000%, which is like nothing else out there. But of course, you have these peaks and troughs where there's 80% corrections at times. Today, we will talk about, first of all, us and what we do as advisors, and what Bitcoin is, what type of investment is it? Is it too late to get into it? How much it makes sense to own for an individual investor or for an institution, and how to buy Bitcoin. Of course, nothing that is discussed today in this webinar will be at all or should be considered advice, and each individual's preferences and needs are different, so they should be discussed with a professional prior to making any sort of investments. So there's no recommendations in this webinar. So who we are, first of all. We help young professionals build their wealth. So while a lot of our clients, the core of our clients, are wealthier individuals and families, I find myself often enjoying, most of all, helping folks that are closer to who I am. I built this investment firm on my own, and often we'll get referrals for investors who may be switching jobs. They're in their 30s or 40s or 50s, or they have a kind of a 401k that they want guidance on, or they just had some kids and they just got married and had children. They're a young family, and they just need some basic advice to get them on their way. And I enjoy most of all taking care of clients like that, because again, the little bit of advice that they need may be somewhat basic, but it often is very important in setting them on their way going forward, whether it's helping them figure out what kind of the least expensive life insurance there is to protect their loved ones if something happens to them, God forbid, or just to figure out how to invest their 401k that is left when they were either laid off or they're moving to another company, and just retirement planning in general. So and we make it a point to work with investors and who are often closer in age to myself and may not be wealthy yet, but would like to understand how to seriously get there. So what is Bitcoin? So it's a decentralized software protocol. So of course, the opposite of something that a Microsoft or a Salesforce would create. There's no one central authority which can just shut down the whole project. It keep popping up all around the world, and it exists with the support of miners who get paid in Bitcoin to continue to upkeep the protocol and keep it alive all the time using their computing power. And it's often viewed as digital gold due to its ability to retain value, and obviously, as you saw by the previous chart, to gain value, and its scarcity. And in the age of money printing, and in the age of constant stimulus, we all know about the stimmy checks and so forth. All that money has to come from somewhere, and of course, it comes from nothing. It's created out of thin air. It may be backed by debt, but that debt is being inflated away slowly. And people see this happening, and even though the inflation officially is quite low, unofficially we all can feel that our dollars are losing value. And so understanding that there's only ever going to be 21 million Bitcoin, and already 19 million of that has already been mined, that's obviously a great reason for people to feel like Bitcoin is somewhat of a gold for a digital age, because there's such a finite supply of it, and they feel like it may protect them from the potential of their dollars losing value. Now, what type of investment is Bitcoin? So we just talked about it potentially being digital gold, right? So there's nothing of Bitcoin that you can actually touch and feel. So it exists entirely in the digital space, and it runs on software. It's basically the value of a network. And the bigger the network gets, just like, let's say, something like Facebook, the bigger the value of the protocol becomes, right? So imagine every new person that's added to the Bitcoin network increases its value. And institutions are just now starting to get into investing in Bitcoin. You may have heard of MicroStrategy or Elon Musk, these folks that are starting to invest their company's vast wealth in these assets, which of course is giving it new legitimacy. So it looks like Bitcoin is on its way to actually become a treasury asset for companies, or a big important macro asset. So kind of a big picture institutional asset, something along the lines of gold, or maybe treasuries, or oil, something along those lines. Of course, the volatility at times can be over 100 or over 60, depending on what period you're looking at. Okay, so it varies, but of course you can have 80 or even 90% corrections, and with a blink of an eye, sometimes one day Bitcoin is up. For instance, I remember just seeing it being over 37,000, and the next morning it's under 30. So it's extremely volatile, and it'll continue to be so. Now, did I miss the boat, right? So the best way to describe and talk about this subject matter, because of course most folks are thinking, well, a lot of people are thinking that are trying to get into this new asset, and I'll often have folks ask me, well, is it too late? Is it too late for me to get in? And it's already trading around $50,000 per Bitcoin, and how could I put money into it? Well, and if we just relate that to what happened, let's say down here, maybe when Bitcoin was trading at 1 cent per Bitcoin, in 2010, and then it went up to 10 cents, and then $1 per Bitcoin, right? Those investors may have been saying the same thing. Most people didn't know about it. Of course, it was mostly tech people that were in this space, and well, you may have felt like you missed out buying something that's just lives in the digital space. Nobody else almost knows about it except a few tech people and libertarian-minded cryptographers. May have felt like it was too expensive then, and then it keeps going up and up and up. And this, by the way, is one of my favorite models in terms of potential price movement. It's been quite accurate in terms of predicting price. And of course, all models are wrong, but some are helpful. That's the key with models. And so this is the stock to flow model. And it's very important to note that every time there's a halving cycle, so every time the amount of new Bitcoin is mined is cut by half, which as you see here, there is a follow. So this colorful line, there follows a increase in price of Bitcoin. Okay, so we're here now. So during the last halving cycle, the peak was, looks like around 19 to $20,000 of Bitcoin. And so you can see this model is predicting that this next halving cycle, it looks like we're on track to get somewhere around $100,000 per Bitcoin. And if the model tracks, you see it kind of overshoots every time the model. So if it overshoots, we could possibly go to $200,000 or $250,000 per Bitcoin during this cycle over the next couple of years before it gradually kind of backs off and goes sideways or corrects. And of course, if Bitcoin does go to 100,000, that's about a doubling of the price. If it goes to 200,000 and 300,000, of course, you can see the kind of percentages we're talking about. So while Bitcoin now being $1 trillion asset, you're certainly not getting the big gains which you may have been getting if you got into it in 2011, but compared to many other assets, certainly still looks very attractive. Another chart to look at, which is helpful, is comparing Bitcoin to other assets, which are also as scarce as Bitcoin. The more scarce it becomes, the stock-to-flow ratio, stock meaning how much of Bitcoin exists or any other asset, to how much of it is being mined in any one period. So you can see here, gold has already overtaken silver in terms of its market cap. So this is silver here, and this is diamonds, so it's matching silver and diamonds. The next would be gold, which is at 10 trillion. Bitcoin is about $1 trillion in market capitalization. Gold is 10 trillion. So the next asset to track would be gold, which would be Bitcoin would have to obviously go up in value by 10 times to hit gold's market capitalization. Because as you can see, it's already as scarce in terms of stock to flow as gold. So based on this stock to flow model, it looks like we may be on the way there. So how much Bitcoin should you own? Well, there's a lot of factors here. Okay, so what's your time horizon? Are you trying to make a quick buck? Well, just forget about it. If you are thinking about staying invested for, this is your short money, you may need this money over the next, let's say year. Well, I wouldn't put more than 10% in Bitcoin, because if, let's say, you're keeping that money for a down payment on a house, well, what if a year from now that Bitcoin is down 50%? Well, at least you'll have 95% of your savings still there, right? If you're investing for 5 years or 10 years or for retirement, well, then it makes sense to maybe increase the allocation, right? Because you want the possibility of higher returns is high, right? But the possibility of short-term dislocations is very high also. Your risk preference. Some folks can't sleep at night unless they're all sitting in CDs, and we have clients like that, or all sitting in bonds, very conservative. If they're down 5%, they're sweating, and it's too much for them, even though they may be quite wealthy. Some folks, they can be down 50%, and they understand, hey, I'm still in this for the long run. I understand that to make more money, I have to risk more, and if I do it wisely. And so they're okay being down 50% or more. Well, in that case, having a larger allocation makes sense. So as far as tax preferences, often if you're thinking about this asset as a potential high gainer in the long run, having the money in an IRA or a 401k type of an account makes sense because the gains are not taxed. You're not taxed until you take the money out and spend it at retirement. And you don't have to worry about offsetting gains with losses and selling low to realize those losses for tax purposes because there is no tax benefit to selling, right? So it helps you kind of stay in the trade, so to speak, in the investment for the longer term, consistent with your goals. So what are you doing this for? Are you doing this for wealth preservation? Are you doing this for growth? If this is a defensive trade for you, wealth preservation, well, of course, you don't want to have a huge amount invested in something like this because of the drawdowns. If growth is the case, again, often growthy investors often are more aggressive. How does Bitcoin relate to other investments in your portfolio, right? This is, again, where a professional helps you figure these things out. You have stocks. Well, Bitcoin has a correlation of 0.21 with stocks in general, and that fluctuates, but a correlation of 0.21, meaning that if the stock market goes up 10, your Bitcoin will go up 2.1. If the stock market goes down 10, your Bitcoin goes down 2.1. So very little in terms of correlation. Not necessarily in that same way either. So it doesn't necessarily move in the same direction. So only 0.21% of the time is going to move in the same direction as the stock market. With bonds, the correlation is only 0.07, meaning that only 0.07% of the time the movement will be in the same direction. And for gold, only 0.34% of the time Bitcoin, you can count on it moving in the same direction as gold. So how do you buy Bitcoin? There are exchanges out there where you have to have either a wallet, or you can keep the money directly on the exchange. You transfer cash dollars into the account or your currency of choice, and then you buy the asset and you either keep it on the exchange, or often people will want to keep it in a private wallet, which is either a hardware wallet, something you can hold in your hand, or a wallet that's online. And it's quite different than holding something in a traditional bank account. Which is why you may want to be working with a professional to help you gain comfort with this process. A more traditional way would be to buy Bitcoin in a closed-end fund, in a brokerage account, or an ETF, which are starting to pop up out there. The problem is, of course, these investments often trade at a large premium because there's not many out there that are available in a traditional custodian like people are used to investing. So the ones that are available will often trade for a lot higher than the actual Bitcoin that they're holding. So in a sense, you're overpaying. You can also invest in the companies which do business in cryptocurrency like Bitcoin, right? So in a sense, you're buying the business that's selling the picks and shovels versus buying the gold itself during the gold rush, right? There are also private placements, which we often work with clients to have those types of investments where you can hold it as a holding in your investment account without those premiums, if it makes sense for a longer term investor. So if you have additional questions about Bitcoin or any other cryptocurrency or investment topics, please reach out to us at Sovereign Wealth Management. Again, my name is Gary Korolev. Thanks for your time.